Going on, everybody? Welcome back to my channel. In this video, we're going to go over a trade using supply and demand, trading the S&P 500, which yielded about a 250% return on the option contracts. It was a little different of a trade. You had to think a little differently, and you had to think outside of the box, which I'm going to do in this video and explain to you my thought process behind it. This was a trade that we took together in the Discord room. If you're new here, make sure to hit that subscribe button. Make sure to stick around. There's going to be a lot of good info in this video. And if you want a very good trading resource, I'm going to link my Instagram. I post daily trading recaps along with very good trading tips and tricks. The link to this will be in the description below. And without further ado, let's get right into the S&P. Every morning, I post a pre-market plan in my Discord chat room of my top setups of that day, and I always include the S&P 500. If you've all been following me for a while, you know it's my bread and butter. It works very well with supply and demand. So this has to do with market context on the both technical aspect to it, based off of imbalances, and I don't want to call it the fundamental, but more of general market context, such as the stimulus checks, which I said they're coming out. It's a perfect way to suck retail traders in to prop the market up. The market is designed to trick retail at all times. I made a video last week about it. When you're buying, they need your liquidity to sell. So this is a perfect tool. It's a perfect way to prop it up. We're close to breaking all-time highs, so expect all-time highs to be tested, whether it be today or sometime this week. Overall, more context was every single dip continues to get bought, and supply is being met with new buying, and new buying at supply is going to lead to more upside, especially if we are in a downtrend. So my levels were for the day where we had supply at 3951 to all-time highs. I wanted to see the reaction. And then we also had demand at 3921 and a quarter, and even better, a little lower at 3907 and 3/4. So that was the overall levels that I was watching for the day. And now you have to play and trade the market without noise and trade only when your imbalances trigger and hit, and when the market tells you it's ready. So what I saw was when the market was open, we moved in a very tight range. And when the market is like this, I prefer to stay sidelined and I wait for my imbalances trigger, because I know when they trigger, it's going to make me money. In the overnight session, we hit this supply imbalance up here. We rejected. Then we double topped to the tick and sold off going into the open. So if you trade futures overnight, this would have been a very valid and very nice about 20-point move to the downside before opening up below VWAP, where it started acting as resistance. So as you're trading, as the market's developing, the type of analysis that needs to be done has to be fast. You have to be correct on your analysis. You have to be correct on the market context. And that's something that I do and provide to members in the intraday commentary room, where I go over my thought process as the market's developing, so new traders can understand what I'm seeing and what I'm thinking as the market is actually developing. So we were below this, and we were trading in a about 10 or so point range, let's just call it. And on the S&P 500, a 10-point range in the first 2 hours of market open is completely garbage, because in the overnight session, we moved in a 20-point range with not a lot of volume because it wasn't the cash session. So now we're consolidating, we're balancing out. If you all know and understand balanced markets, they're going to lack follow through, they're going to lack momentum, they're going to lack setups, and it's best to either trade with small size and have a scalping mindset, which I told members to do, or to avoid completely, shut down your screens, and save some mental capital, as that's what's very important. You don't want to tire your brain out and tire your whole mental aspect of trading out. So not only did we reject VWAP once, we rejected it twice, and the market was selling off, looking like it was going to test the low. Remember that demand zone at 3921 that I mentioned? If we broke below the low, you could either A, wait for this to trigger and play long, or B, scalp puts below the low. And I'd rather play the first scenario, because you don't know if the market is going to actually trigger at this demand, and you don't know if it's going to be a trick that institutions use where they break the low before bouncing any higher. So there's a lot of things that have to be thought of as the market's developing, and a lot of traders struggle with pulling the trigger fast. We're coming up with these reasonings on the blink of an eye with whatever the market is spitting at you. So then we started selling off, and look at the volume in my demand and balance. I love seeing volume. If there's no intent, if there's no follow through, it's safe to say these orders are getting absorbed, and the market is going to start rallying to the upside. So now once we started rallying, I got a little I don't want to call a red flag in my mind, but we were still balancing, so the quality of setup was going to be a little lower. We broke below the low, and now we're trading back into the range. I took a little stab at this. I bought a way out of the money SPY 398 call, risking about 860 bucks. My stop was going to be below the demand zone down here, and I had 2 days in expiration, 2 days till it expired, because I was speculating. This was more of a lotto or a speculative play that we were going to trade 4,000 and that we were going to break all-time highs, especially because we dipped inside of a demand zone. So if you were to follow the previous days, every single dip we've been seeing has been getting bought up, and every single supply zone has been getting met with new buying. We dip, we start moving up from that dip. If I pull up some more days here, if I go to a, let's just call it 20 day, I could show you tons of dips. You know, a dip, it gets bought up. Dip, it gets bought up. So that's a reoccurring theme. And if we go to a little bit of a bigger picture, if I go, let's just say to a 30-minute chart, actually, let's do a 2-hour chart. This is something that we've seen on somewhat of a smaller scale where the market dips, it rallies. It dips and it rallies back up. And now we're in a strong uptrend, making consistent higher highs and consistent higher lows. So now we're in a strong uptrend. We're consolidating near all-time highs, which could be seen as a bullish sign, especially that we're now bouncing off of demand. So if I go back to a 5-minute chart, I saw the same exact pattern, but on an intraday perspective. So I took the market long around 3925, anticipating that the all-time highs was going to trade. It was a small position, only risking $860. I was willing that to accept my position would go to zero. It was called a lotto. So I took that trade, and I did not expect the market to rally as much as it did. But I say this all the time. I mention it in the course that you have to ride the trend. You have to at least either take some money off the table, or if we're showing signs of bullish momentum, making higher highs, making higher lows, don't panic if you see a little quick profit taking down to the downside. As long as we're maintaining our uptrend, you would have been able to hold this large winner. Like I said, did not think that we were going to test all-time highs this day. It was just something that happened, and I was enabled to get these large gains because I let my winners ride, and I actually didn't even take profits because when I did open the trade, I was willing to accept the full premium loss on it. So this is what I mean about supply being met with new buying. We tag it perfectly to the tick. So if you're a scalper, and you could get 10 points on this, and 10 points on the S&P 500, whether you trade SPY options or the future outright itself, you're going to make a very good play off of this. Tagged it to the tick, but every single supply zone is being met with new buying, new demand starts forming, and we rally. And at this point, the market closed about 189%. And I was holding this overnight just because we were at all-time highs. We had a strong move going into the close, and I was anticipating a gap up and a strong rally going into tomorrow. So I posted this on my Instagram story. 189% end the day on SPY, out the money calls, out of demand from the pre-market plan, anticipating an all-time high test. And the plan for today's S&P 500 was we were at all-time highs. There's no supply, which means there's zero downside pressure, which means there's zero reason to short the market unless new supply will form. I wanted to see some bullish momentum. A lot of charts had bullish signs, and we had demand at 3945. If we pulled back, I wanted to see that level to hold. Right now, I'm not very interested because of the context of the market. Those two supply zones that I had yesterday, marked them here, are now all invalid since price is above it. We don't have any supply, and we have demand somewhat where this line is right now, but I'm just going to remove it. And I was holding these calls overnight, so obviously I had somewhat of a bias. Equities looked bullish, but when the market opened up and I recognized the balancing conditions that I mentioned in the commentary tab, I was not very interested. I was warning all the traders to try to avoid setups or at least scalp, as I said earlier in the video. So the market opened up and we moved in a 10-point range in the first hour and a half, which is completely garbage. And this is action to avoid, recognize these conditions, and then trade accordingly. So as soon as we got that push up above pre-market highs, I sold for a 250% gain on this, and I scaled out. So I wanted to hold a couple contracts remaining just in case we wanted to test 4,000 today, or at least continue to the upside. But these balancing conditions got me a little frustrated. I knew we weren't going to move, and if we were going to move, we needed a lot of momentum to actually move the market and the underlying equities in the S&P and in the NASDAQ. So as soon as we started selling off, like I said, I was getting a little frustrated because of how slow the market was moving. This is mentally draining. It's exhausting if you're watching the market tick by tick. So if the conditions are like this, focus on a little bit of a higher time frame. And as soon as we got below VWAP, and as soon as we got below this all-time highs at 3959, my line was around 3957 to stop out. We stopped out there. I sold the last remaining contracts for about 140% return. So not bad. But one thing that I noticed, and I'll say this, my first scale outs on all my trades recently have been excellent, been getting crazy wins, very good gains. And my strategy, I like taking some profit, leaving it on the table in case the market wants to continue and ride the trend up, like you saw yesterday. But my second scale outs have been terrible. I'm not going to call it terrible. I still gained 140% on those, but they are not anywhere near where my first scale is. And I'm definitely giving some money back, profit that I never had, but still giving back some profit on my second scale. So going forward, I said this last week as well, I'm looking to take full profit off the table as soon as I have it and as soon as my first scale triggers. Now the market's just chopping. There's really nothing going on today. Major balancing day. We broke below the low. We're coming back into the range. This looked very similar to what we saw yesterday, but this failed right here and started just chopping around. Now coming, it broke the low, and we'll see what happens when we close. I'm not really interested in taking any other trades for the rest of the day. Market's only open for about another hour and 45 minutes. But I'm going to wrap this up here. I hope this wasn't me rambling on for too long. If you did enjoy, subscribe to my channel, like this video, and make sure to follow me on Instagram. If you really want to learn more, check out the course on my website. It goes very in depth, and it comes with access to the Discord room. But other than that, see you all later. Peace.